everybody, Alex here. Welcome to my finance and accounting education channel. Today we are going to talk about divesting, basically selling all or some assets that we already have in portfolio. Specifically, we are going to talk about shares or stocks because sometimes there is a good moment to also sell. We are always talking about selecting companies and investing in them and buying the shares and buying the dips, buying the market dips and so on and so forth. So basically investing, but at some point there might be time to basically also take our money back, recognize hopefully some gains and not some losses. Also pay some taxes for those that have made gains, so the capital gains tax, which we all need to shed a tear for all of those that need to pay capital gains tax. We also need to shed a tear for all of those that are recognizing losses, basically selling the assets at a lower price than the one at which they bought them. And as you see, which basically in divesting means in either way means shedding a tear, so there is no joy anymore in the world. But before we jump right in, and we have specifically to this subject, we also have to let's say to case studies to assets that I have recently divested, and we will talk about it and how what kind of considerations I had and I took in the decision making, and we will see some more details, and I hope that this will help you a lot. But before we jump right in, I'm going to ask you to subscribe to my channel, to hit the bell notification button, and you will never lose an update. I do them quite regularly these days. You should expect at least 3 updates from me every week on Tuesdays, Thursdays or Fridays and Sundays. And that being said, let's just go right in. So we are going to talk about divesting, and we are going to talk about 2 European companies in the 2 different sectors. Allianz, which is in let's say in insurance, but not only. So it's in financial services, and BMW, which in case you didn't know, is also luxury car manufacturer from Europe, from Germany. Allianz is also was founded in Germany, but they go far beyond, also from operations point of view, so far beyond Germany, and they are let's say have a European and even global presence. About Allianz, about my plans of divesting Allianz, I have already spoken before. I'm linking right now the video about Allianz. I said back then that I have set a target price which was 220 euro per share for selling, and I was hoping it will reach it by the end of the year 2021, so by 31st of December. Unfortunately, it didn't reach that target, but it reached it in January quite fast, and actually it jumped above it, and I made this decision that I should divest myself from Allianz, and we will see why. And also there is a similar discussion about BMW. So before we go directly to the specific cases, let's think that there are some reasons or situation in which you want to divest. Simply you need the cash, or for an emergency, if you want to buy a house, anything goes. You need the cash, you need to divest, and you need to choose from your portfolio maybe some of the investments you previously made or all of them. You need to divest because you just need the cash. So it's a no-brainer. It's as simple as that. Then it might be that you have identified better opportunities, so you see some trends, you see some new companies maybe, or older companies that are doing new and interesting things, and you see some potential there, and you basically, again, you need to reshift your portfolio. So we go back to the you need cash, just that you are making this decision in order to shape your portfolio in a different way. Another reason will be that the company is having problems, which might be obvious. A drop in sales, a drop in profits, so a drop in revenues, a drop in profits, reputation problems, scandals, CEOs doing things that they shouldn't do, going against the ESG, so this governance regulations, bribes, anything bad that can affect the company would potentially be a ground for a decision to divest that company. Or simply, which is my case, why I made these decisions about these two companies, Allianz and BMW, you no longer see potential for substantial returns or desired returns at a certain level, and we will see why is that with both of them. Let's just say that for one is more of a sector problem, with the other one is more of a, let's say, not that I see problems on the long term with the sector, but also I see some stagnation in the sector on a longer term, so I don't see any juice coming out of them on longer term. Then we have let's start with Allianz. Basically we have the share price evolution since a long time ago. I'm just going to ignore the part before 2004 because 18 years have gone by, so it's clear it's no longer relevant. But if you go from 2004, you will see there was a strong drop at the beginning of 2020. Basically that's the COVID effect. I have acquired the shares somewhere in June, both of them, Allianz and BMW, somewhere in June 2016. The buy price for Allianz was $125 euros back then. Then more or less it went up till the COVID pandemic, and now it recovered, and let's just say that the maximum of the last 5 years was 231.25, so it's exactly pre-COVID pandemic, the maximum, and now they briefly reached, I think, even 226, but I sold them with 224.25. They have a very nice dividend yield, not fabulous like 7-8%, but a 4.33%. I can only tell good things about this company. It's a very large, very stable company, 90, so almost 91 billion market capitalization, trillions under assets under management. So it's a rival to the large ones, to the BlackRock, State Street, and Vanguard. From this point of view, quite stable. Everything is okay. But then the troubles start. From my point of view, financial services. I don't see any, or they haven't announced anything specific that can, let's say, be a good game for them in the future. So they belong to one of these industries that is quite stable, quite classical, quite, let's say, old school, and nothing spectacular will happen. Anyway, if you are thinking in this area, maybe fintechs are something new and which has potential for growth in the future more. There are other things which I do not dare recommend, and yeah, things like cryptocurrencies and decentralized finance. However, they seem to be none of this involved, and for the future 5-10 years and or so quite a long perspective from my point of view, I don't see them doing anything spectacular that will raise the prices to, let's say, 300 or something like that. There was an analyst which said that the right price for the share is 250. I kind of lost my patience waiting, and since the shares dropped in the meantime, so I sold with 224.25, at least on the short term. Now they are 221.75. I think I made the right decision about this company. So that would be about Allianz. Let's just say that the company and the sector, there is some innovation in the sector. This company is not really into that kind of innovation. It belongs to the dinosaurs, to the old ones, which are doing good things, but they don't have that much ability to innovate and to come up with new ideas. Then I'm introducing you this template. We have already spoken about it, and you have this video when we talked about how to evaluate an investment. Back then I said that you can use it for basically anything, for real estate, for bonds, for in this case we are using it for shares. It's very simple. I didn't cut the last 3 periods, which are anyway not relevant in this case, but you can hide them or just delete them and so on. Just be careful with some values here not to lose them. You can also implement here more columns if you have something which is on a 30 years period, or you are working at month level and so on and so forth. So my investment starts in 2016 and I kept these shares till 2022. Initial investment meant the price of shares and one-time expense, which was the transaction commission. Then in the meantime I also got some dividends. These dividends are already net of capital gain tax, which is only fair. Remember, when we are comparing, for example, if we are saying that in 2021 this share brought me 2.5% or 4%, we are not deducting the capital gains, because we are comparing with the, let's say, with the index of the stock exchange, which will be, in this case for Allianz, will be DAX, the German index, and that also doesn't have the tax deducted. So it's only fair to say, okay, the DAX grew by, I don't know how much, I don't remember exactly, last year 10%, let's just say the share grew by only 4%. We didn't deduct the tax, the capital gains tax from these percentages, neither for Allianz nor for the DAX, yeah. But when we are trying to evaluate what we did with this specific investment, it's okay to be fair and to try to deduct all the costs and all the revenue sources that we got. Then I sold them with 3,939 euros at the beginning of 2022. Then you have the inflation. Now there is and also I paid the commission for this transaction as well. Then you have the inflation, which is the discount factor here. 0.9% in 2016, 2.1% in 2017, 2% in 2018, 1.5% in 2019, 1.4% in 2020, and 2.8% in 2021. This is the inflation in Austria, because I live in Austria and it's only natural to think like this. Now there is a discussion here, because I bought them in 2016 in June, so maybe I should have taken only half of the inflation here from 2016. Also, I didn't sell them exactly at 31st of December 2021, so there are like 15 days of inflation also from 2022, which I have no idea how much is it. So you see, these things are not absolute, and we are trying to be as accurate as possible. However, for the past 6 years, we have accumulated inflation of 11.2%. Then we just, let's just say we calculate this compound discount factor, which is just multiplying, so it's working like the compound interest rate. It's multiplying the inflation for the discount factor from each year. This is how we know that it was 11.2% in total for these 6 years. And then since we are talking about the net present value or net past value in this case, we are evaluating the investment at the point in time of 2016. We get 1,000, and we take each and every cash flow from each and every year, and we divide it by this compound discount factor, and we get these values here. In 2016 the value is the same, so we have 0 discount factor, or we divide by 1, let's say, and then of course the values are, let's just say that they are dropping. For example, in terms of 2016 money, the 3,894.5 euros from 2022 are actually equal with 3,502 euros. And then we add all these amounts from discounted cash flow, and we get the net present value, which is 1,458. We can do the same if we are thinking at the value which we get in 2022, which means that we need not to discount but to inflate the past values. We inflate the initial investment of 2,544.3 with 11.2%, and we get it is as it we will have today to pay 2,829 almost euros. and then we get let's say a net future value or a net current value at the moment of divesting of 1621.2. Now remember, these values are positive, which is a good thing. That means we have beaten the inflation. What is missing from here is missing on purpose, because I also need to sell my courses, and I'm linking right now the video in which I'm teasing you with the course about the credit and investments. You might ask yourself, okay, first of all, what was the average inflation in this period? And this can be calculated very easily. And in each year, what was the average gain, or this internal rate of return? And for example, let's say that maybe the inflation was 2% and I made my investment 3%, so I gained 1% above the inflation rate every year. And you can find out from this course, which I just linked to you, this actually the teasing video, and below this video you also have links to my courses on Udemy, Patreon and LearnFly, and you can find out from this course how to calculate everything. The course is meant for corporate purposes, so for investment in the corporate world, but many of the concepts and knowledge that is captured in this course can be applied also for private purposes, like for example for this as you can see, for this evaluation of how much money and how profitable was your personal or private investment. Then we are going to BMW. I said that with BMW I have a problem not with the company as such, but more with the sector, meaning that I'm linking right now the video about the future of the car industry. We've been talking about, so there is there are these changes in the sector, massive changes. Mainly it's about propulsion, switching from combustion engine to electrical vehicles, or to hydrogen powered vehicles, or to synthetic fuels powered vehicles. So that would be one of the biggest changes that is happening in the sector. And there are some others which lead me to believe that the sector will shrink in the future, meaning that I hope, and the people seem to have realized, that having a car and keeping it parked for 90% of the time and using it only 10% is not in no way a good investment. And I expect the total numbers of cars in traffic and the sales as a result and so on and so forth to drop in the next years. We have here to count other trends like the potential robot taxi, so the cars that drive themselves, so they no longer need a driver. Then there are some other trends which have seen increases in this ride sharing, in the let's say in the renting of cars. You have all this Uber, Drive Now, Car to Go and so on and so forth, which are available, and together with certain evolutions in the mentality of young people and in their income actually, so which they don't seem to control that much, I think that the market will shrink in the future. And I have nothing against the company. It's quite a good company. I've seen that they had an innovation recently, a car that changes its color. That was very funny, because the color of a car is actually the way you identify it, and in the registration certificate of a car you also have this color. And I was saying that maybe in the future they will say color will no longer be any identification for the police, and when they spot a car, and the color will no longer be relevant. However, during the competition, the rise of electrical vehicles, the alternatives and so on and so forth, I think it's a shaky ground to be in. I mean, the easiest way which you can tackle this would be to invest in several companies which you think are somehow different, and one of them might succeed in the market, but still, given the potential market shrinkage, which for example I didn't see for semiconductors, I'm worried of staying invested in any car manufacturer right now and in the foreseeable future. Let's just say that I bought the shares also in 2016. The price was very good somewhere in 2015. It never got back to that level after I bought it during the Brexit. Let's just say the 5-year maximum was 99.32 euros, so it never reached 130 again. I bought the shares with 67.97, sold them with 98.26. Dividend yield of the company 2.0.2%, so quite a decent dividend yield. The PE ratio specific to a classical car manufacturer below 10. Also a quite large company with 61.7 billion market capitalization. However, I don't know if I want to be, just as I have said, not in this manufacturer specifically, but in this sector in the next years, until the things are very clear, which company is moving and which propulsion is adapted, and which companies are better equipped for innovation point of view to be serious competitors with the new propulsion systems, and so on and so forth. We have the same template. I'm not going to clarify it again. The same thing, 2,559.3 investment in 2016, then the dividends excluding capital gains tax, and then the selling of the shares with 37.86 commission included. The same inflation applies, the same cumulated inflation 11.2%, the discounted cash flows per year, and then you have the sum 737.4. Once again, remember, if it's positive, that means we gained more than the inflation rate, which is always a good idea. And if we are looking at in the future, of course the value will be slightly higher. Basically, we are bringing all the past cash flows at the moment of 2022, and we get 119.8 euro. That being said, I think I helped you with this presentation, trying to understand how is my decision making about which companies to keep in my portfolio, which one to dump. Of course, there are several reasons why you can dump a company. It's very important to choose the moment when you bring it in your portfolio, and also the moment when you take it out of your portfolio. If you take it out of your portfolio at a loss, you will get a tax credit, meaning that you can put the loss against the future gain, and in total reduce your tax levels. I'm no financial analyst, this is no financial advice, so your decisions about investing in these two specific companies or in others, or divesting these two specific companies, are yours and yours alone, and I take no responsibility for your decision making. If you like this video, don't forget to hit the like button, comment in the comment section if you have something to add to the topic, share it with somebody that might be interested about decision making in case of divestments, or about the specific cases of these two companies. But most importantly, do not forget to subscribe my channel, to hit the bell notification button, and you will never lose an update. On my side, I do them quite regularly these days. On Tuesdays, Thursdays or Fridays and Sundays, you should expect new and hopefully interesting videos from me. Once again, my name is Alex Petrescu. This is my finance and accounting education channel. I hope you liked the video today. Thank you for your patience and your time, of course, and I look forward to presenting to you with the next occasion. Goodbye.